Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys, today we'll take a look at the Canadian dollar. So if you remember, we have intended to prepare the weekly research on the Canadian, since we haven't taken a look at it for a considerable period of time, approximately already for 3 months. We haven't prepared any update on the Canadian dollar, but still this currency is really interesting and it shows really big progress that demands some explanation, and we need to take a wide look on the Canadian, what's really is going on. At the same time, guys, today we will take just brief frame of our analysis that we will prepare on the weekly research, and we will take a look at the daily chart. Mostly because the pattern that is forming right now, it's tactical. It will not impact on the whole picture, on the long-term perspective of the Canadian dollar. But still, it's very nice pattern is forming that could give us the chance for short-term trading with a high probability. And this pattern, as you can see, will be the bread and butter buy on the daily Canadian dollar. Also, guys, we're shift to Canadian dollar because euro currency gradually is losing attractiveness for the trading because it's too fluctuating market. It's too choppy right now. So it seems that market doesn't know what it really wants to by itself. So it stands in absolute indecision. So the fluctuation is very fast and with a small scale in some sort of the whipsaw reaction. It's contradictive patterns are forming right now, but these patterns are very small. So currently euro currency looks really not interesting for a trading setup that we have got previously with the long position and the confidence support that we have taken. And on Monday, yesterday has failed. Although it was painless for us because we have the place on the break even, but still, market it seems that it just can't decide what direction to choose. So just 2 days ago, it has challenged the attempt and shows the attempt to break out to the upside, but yes, it has dropped and returned back in the consolidation. So at the same time, 107 area on the euro currency hasn't been broken yet. And so we can't speak purely on the bearish context. That's why euro currency right now seems not really interesting. Also, guys, I would like to show the picture. I don't know whether you trade United States shares, but this picture is yesterday has made my day. So take a look at the monthly chart on the S&P index. This is just huge double repo sell pattern on the monthly chart. And if you will take at the starting point of the thrust, maybe not even these lows, but if you will even take out these lows, for example, the 50% minor retracement action will be to this top approximately is 1540 area. It's 30 points drop. It's just very awful. So, and this pattern at the top looks really not very pleasant for bulls and for overall global market, as you can see. So right now let's go back to the Canadian, because setup really very interesting and clear. I like such sort of the setups when they are forming on the market. So we have on the Canadian dollar excellent example of the bread and butter buy pattern. So you can see thrust up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, even more candles to the upside. Market has reached a resistance. This was the weekly period resistance one, drop lower, close below the 3x3 moving average, and simultaneously has reached strong support areas, 40 to 50 area. This is 50% support, the thrust, weekly pivot support 1, and take a look daily average sold. So this is really strong support area where we should take the long position according to the Napoli technique. The minimum target of the Canadian dollar will be the 618 retracement of the whole move down. So that's approximately will be somewhere around 145, 145.22 area. So somewhere in this area. So as you can see, not small potential. So approximately 100 pips to the upside, 200 pips to the upside. It's not really small action. Anyway, but here some tricky moments exist, guys, with this level right now, and I will show you on the hourly chart. On the hourly chart, guys, at the first glance, you can see that market has completed ABCD pattern. Right now is forming the butterfly right at the support, and it seems that's very good area for taking long position immediately. But it's not as simple as it seems, because if you will take a look at this ABC tab pattern, you'll see that market first stands currently slightly below the target. Also, guys, take a look at this acceleration right before target has been hit. This such sort of acceleration is a very bad sign, where you would like to take the long position based on the completion of the ABCD pattern, and it significantly increases chance that market will continue to the next targets, 1618, that stands at 41.46. Also, guys, take a look that 41.46 is precisely 618 support of this most recent thrust up. And finally, we have the butterfly, and butterfly also has two completion points, two possible reversal points. First one is 127, second is 1618. So 1618 stands very close. It's approximately 10-15 pips difference with a major completion point. So how we could do what we should do this, and how we could trade it? Well, again, we will give you a number of possible scenarios, and you could choose depending what your risk level that you would like to take. First of all, what will be the common sign for any entry technique? This will be the initial stop placement. Initial stop placement should be below this area, because that will be some kind of the invalidation point. Should Napoli Brent Body suggest starting action to the upside from some fib level, important fib level, but this level could be 3.8, this could be 6.18, it could be 50 level, and we do not know definitely which one to choose. But what we do know is that if market will drop below this level without any response, that will be probably the failure of the Brent Body. That's why our stop should be placed here. But this conclusion comes not just because we have the deep level, but because of the situation on the hourly chart. For example, if market has stopped here with a gradual action with no acceleration down and start to form butterfly here, I would say that probably, guys, we could just take the position on the butterfly and place tight stop just below this 50% support, for example. But here we have some negative sign that increase significantly chance that market could drop right to the 1618 extension into the 618 fib level. That's why any stop should be placed here. Conservative entry techniques suggest that you just wait when the market will hit this A level and then take position here. But we also can't be definitely sure that market will drop here. We can't exclude that market could stop indeed here, for example, and turn to the upside. That's why first entry point will be here. So another entry technique suggests that you could take the half position here. Then wait what will happen. If market will drop low, you could take another one here and place stop here. If no drop will happen, the market starts move up, well, that's great. You will have at least the half the position, and you could later will be able to apply the scale in to add more on some retracement. Finally, the most the safest entry technique suggests waiting when the market already will start upward action. This is a bit advanced technique. We have discussed it when we, if you remember, when we have planned the taking the long position on the gold market last week. We have discussed the same issue. So it based on the reversal that already will happen from our predefined level. Market will start move up, and after that, when the upward action already will start, you will take the position on some retracement, minor retracement, 3.8 for example, or 6.18 retracement, already from this starting upward action. This will give you maybe worse entry point, maybe it will be better entry point. For example, if you will take position here, market will start retracement and then show retracement here, start action and start retracement here. Maybe your entry will be even better than right now. It's definitely, we can't say definitely right here. But this entry technique, for example, in the market ratio support, starting move up, you will enter on some minor retracement, will definitely will let you to place tighter stop. That's why this is choices up to you what technique you will choose. They are different also on the sophistication degree. So the last one is most sophisticated because it will demand total attention from you, managing the position around the retracement, fast analysis, because you will have to take the position on the hourly chart when the situation changes very fast. The first one is most simple. Just wait when the level will be hit, take the position and place the stop. So that's why, but any of this entry technique will not change the overall context. The overall context is based on the Judd Napoli bread and butter pattern, and the common thing for all this entry technique that initial stop should be placed right here, except the last one. The last one entry technique will depend on where you will enter, so you will be able to place a stop tighter. But if you plan to take a position based on the butterfly here or right here, you anyway will have to place stop below this level, below the targets of this ABCD, and below, of course, of this 618 support.